So we hear a lot about the top 1% in the news. It's usually in quite a negative light, followed by something along the lines of don't pay their fair share or should pay extra tax. But what does that actually mean? What is the top 1%? So in this video, I want to sit down and have a little bit of a chat about what is the top 1% and give you some of the background data from the ONS so you can see for yourselves. So hello, my name is Chaz and I go by the name of The Risk On Investor here on YouTube. This channel is documenting my journey to building a £1 million investment portfolio. On the channel, I'll share some of the things that I'm doing so you can see what's working for me, what isn't working for me. You'll see my investments and you'll also see just some of my rambling thoughts, which is more videos like this. Now, of course, nothing on this channel is investment advice. It's purely documenting my journey. So if you see investments that I'm making, please do your own research and don't take it as financial advice. If that's the kind of content that you think you'll enjoy, then hit the subscribe button down below. You can also hit the little bell to be notified when new videos come out. So without further ado, let's crack on. Now, why would we even want to know if we're in the top 1%? Well, I think there's three reasons, really. The first is that I think because it dominates a lot of the media narrative. So the top 1% is often used for a placeholder for the really wealthy or really rich in our society. And as I kind of alluded to in the introduction, it's often followed by something along the lines of pay their fair share or need to pay more tax. So I think being able to define actually what the 1% is can really be productive and helpful for those conversations. So the second reason why I think it's probably good to define the 1% is that we all live in our own little bubbles. Some of us live in more privileged bubbles than others, and some of us live in more deprived bubbles than others. So for example, if you're a lawyer living in central London and you know a lot of other lawyers, you're probably earning more than the average person, but it may not feel like that to you because everyone you know around you is also earning a similar amount. And so I think just seeing some of the raw numbers can really set expectations, because if you're higher up in that category, you might not realise you're so high up, and again, if you're lower down, it might feel like you're really at the bottom of the food chain when you potentially might not be. And finally, I think the last kind of reason why we want to define this 1% is because we like judging ourselves against others. Now, I personally don't like getting too nitty-gritty into the details because I think comparing ourselves to others can be quite a lot of a waste of time and isn't particularly healthy. And so I'm hoping to sprinkle in a little bit of realism and honest conversation in this video as well, just so we don't get too pent up on how others may earn more or have more than we do. So there's two ways I'm going to define the 1%. They're both different metrics. Again, some people prefer one over the other, so I'm just going to present them both here. So the first is income and the second is wealth. So just to go in straight away, to be in the top 1% for income in the UK, you need to earn at least £199,000 per annum pre-tax. So that's data straight from the ONS, and that would generally be somewhere around £130,000 post-tax. Now, just to help visualise this, I've actually plotted every percentile through from the 1st to the 99th, and I'll pop that here on the graph on the screen. And you can see that actually the growth in the distribution is actually fairly linear for most of the percentiles. So as you go up a percent, you'll see a small increase in the income that you'll receive every year pre-tax. But what really is quite interesting is when you get to the very top end and you get this kind of hockey stick growth. And that's because once we get to these higher brackets, we have some outliers that really skew everything upwards. Now, just to give some more context to these numbers, I'm going to pick out a sample of different percentiles. And what I've done is I've picked out what that means that you would be earning pre-tax, but I've also given an hourly number. And so this is just to put it into context. So I've taken the minimum wage of £10.42 at the time of recording and said how many hours per day you would need to work to earn that pre-tax amount. And so this is adjusted by 5 working days a week for 52 weeks per year. So the bottom 1% in the UK earn £12,800 per year. That's around 4.7 hours of work per working day. The bottom 10%, £15,300, around 5.6 hours of work a day. I'll skip up to the median, which is the midway point. So the average person, as it were, earns £27,200 per annum, and that would be equivalent of 10 hours of minimum wage work per day. Now again, I'm just going to hop up right to the very top end of the scale, and you'll see that if you're in the top 1%, earning £199,000 per year, you would need to work 73.5 hours per day, which is obviously impossible, but it just helps put some of that into context. Now, if you worked a minimum wage job for 37.5 hours per week, which I've taken as a bit of a proxy for a full-time income, you'd earn just over £20,000 per year, and it would put you in the 28th percentile, so roughly at the top end of the bottom third if you work a full-time minimum wage job. Now, the other measure that I mentioned at the beginning of the video was wealth. So I want to have a quick look at wealth by percentile here in the UK. So firstly, just a quick background. Why would we look at wealth separately to income when income is the day-to-day cash flow that we get, and so is perhaps a better proxy for the top 1%? Well, that's because wealth is taxed differently here in the UK. So as you earn money and generate income, you'll pay income tax, you'll pay national insurance. There's a couple of different taxes that you'll pay on that money as you earn it. Whereas wealth is taxed differently. A lot of wealth is only taxed when you crystallise a gain on that wealth. So for example, if you bought some shares in a company and they appreciated, you wouldn't pay any tax until you sell those shares. And that tax rate is often lower than the equivalent income tax rate that you would pay. Now, the data that I could find from the ONS appears to include property, so just bear that in mind when we look at the numbers, because there'll obviously be much bigger discrepancies between regions and ages, for example. So again, I've taken the data from the ONS, I've plotted it in a chart here, and I'm just going to pick out some of the key percentiles, just so you get an idea and a flavour of where you might sit on that chart. So at the very bottom of the chart, the bottom 1% actually have a negative wealth, so around negative £1,700, meaning that there may be debts that are greater than the assets that they have. Hopping up to the median, which is your average middle person, you would have wealth of around £302,500. And finally, hopping up to the top 1%, you'd have wealth of at least £3,668,200. The ONS also has a breakdown of assets, which I'll put on the screen here now. And there are a few things that stood out to me when looking at the wealth per asset. So firstly, it's that the lower down the income distribution you are, the more likely that physical goods are going to dominate your wealth. So this might be your TV, furniture, maybe a car, those kind of assets. Once you get to the middle of the distribution, however, now this is probably what I see as more your kind of typical middle class person, you'll notice that property plays a much bigger part. And to me this makes a lot of sense. Since a house is probably the most expensive thing that you'll buy in your lifetime, it makes a lot of sense that that's going to make up a big chunk of your wealth. But then as we stretch towards the top of the wealth distribution, you'll see that actually a lot more financial and pension wealth starts to come in. And this might be linked to the fact that those who are higher up the wealth pyramid might have had a higher income during their working career, and so therefore might have been able to save more money into a pension and enjoy some of the tax benefits for saving into a pension. Now obviously that doesn't apply to everyone in that bracket, but that just might be a reason why there's higher pension and financial wealth in those groups. Now, does this data surprise you? If I'm honest, the income distribution actually didn't surprise me all that much. I think unless you are in one of those top bubbles, it's probably fairly realistic, a lot of the numbers that you see there. Now, there obviously are some individuals that we see on the news who sit at the very far end of that distribution and perhaps skew our opinions slightly, but generally I didn't find it to be too far off what I thought. However, having said that, I did find the wealth distribution far different to what I thought. I thought the wealth at the top end would be much, much higher than it was, only really hitting into the multiple millions once you got into sort of the top 10-15% of the UK. Now, I think the reason I thought this would be higher was because property was included in the wealth figures. So I think when I was thinking, maybe someone who bought a house in London 30 years ago might be sitting on £1 million worth of equity in a property without any of their working career savings into pensions and things like that. So I think that's why I thought wealth would be a lot higher. Now, also interestingly, if you combined all the demographics, so all the different age groups and genders, etc. in the UK, and you plot what's known as the GINI coefficient. So just quickly, the GINI coefficient is a measure of equalness in a way. So it ranges from 0 to 1 or 0 to 100, depending on how you want to measure it, with 1 or 100 meaning that all the wealth is held by one person and everyone else has 0, or at the very bottom end of the scale at 0, that would mean that all wealth is distributed perfectly equally in a society. The UK has actually been fairly stable for about 40 years now. We're at levels that were last seen in sort of the 1980s, which again surprised me a little bit. I think maybe the advent of social media and what we see on social media portrays that this income inequality has changed a lot more than perhaps it has underlying. And that was a piece of data that surprised me. So whilst the actual distribution of the income itself didn't strike me as particularly odd, the fact that the Gini coefficient had been broadly stable for the last 40 years did actually give me quite a lot of surprise. Now, you'll know from this channel that I'm trying to hit a £1 million investment portfolio, and that would actually put me in the 83rd percentile if I can reach that. But that £1 million goal doesn't include a paid off house at the moment. So realistically, the personal wealth would actually be higher than £1 million, which could easily mean that if you have £1 million in investments and a paid off house, you're in the top 10% potentially in the UK. Now, as I said, perhaps because I've arbitrarily set that £1 million goal, I thought maybe that the top end of the wealth distribution would be further out than that goal. But I'd love to hear what you think about that. Are you surprised by the income or the wealth distributions? Now, there are loads of other ways to chop and change the data, so I'm just going to quickly look at some of them here. So the first is by age brackets, and the second is by region. So firstly, looking at age, I think it makes total sense when you look at it by age, that the wealthiest proportions of individuals are those aged between 55 and the state pension age. Now, when you think about that, if they're going to have bought a house, will have bought a house by now, would have been paying off the mortgage, might even have paid off the mortgage by that age. They'll also have had their entire working career, in which they could have been saving into a pension or building wealth in physical goods and other assets. And they also might have reached the point where they might not have started drawing on things like pensions yet. So to me, it makes perfect sense that they're at the top of the wealth pyramid. Perhaps slightly surprising to me was 16 to 24-year-olds being just over £22,000. Now, I couldn't find anything that explicitly says this, but I believe that student loans aren't included in that number. And so, again, 16 to 24-year-olds probably covers quite a broad range of people. So that could be people who have been in the workplace for maybe sort of 8 years if they're an early school leaver, or that could be people who have only recently graduated and just started out in the world of work. So I think if there was a finer breakdown on the ONS website, there'd be a much greater distribution of wealth in that age bracket. Because once you get into the older age brackets, particularly maybe above about 35 years old, if you're going to have bought a house, you've probably done it by then, and you might be settled with a partner by then, and you might be in a job and have had a chance to start building some savings in a pension or outside of a pension. Now, the other obvious way to chop the data would be to look by region. And to be honest, I really thought London would be the wealthiest region in the UK, but it's actually the fourth wealthiest region, edged out by the southwest, southeast and the east of England. Now, I think the reason I thought it would be top of the food pile is because of house prices. So obviously house prices in London are notoriously high, and the equity in your house is included in the wealth data. So I think I just assumed that would give a higher starting point. But possibly it might have reached the point where house prices are too high in London, for example, and that might mean that it's actually difficult to build a lot of that wealth, especially in property, if you're in the younger age of the spectrum. Now again, I don't have the data to back that up because the ONS data doesn't break it down quite so granular as that, but that would maybe be a hypothesis that I'd throw out there. Now, I was also quite surprised when you get out of those top few regions that many of the regions actually seem quite stagnant when you look at the data for wealth. Now, I will just say this data is inflation adjusted. So if inflation has gone up by 2% and wealth has gone up by 2%, the line would be flat. I really thought there'd be more regions that had seen a greater incline. I think maybe this is where a lot of the argument about people feeling worse off comes from. I think because people haven't been able to build up property equity, pension income, or just private savings that have outstripped inflation, it feels like living standards haven't improved. Now, a particular note maybe goes to the chart at the bottom, which is the northeast of England, and that's actually seen a drop in wealth in inflation-adjusted terms since 2006. So that's effectively 20 years, where if you live in the northeast, the median person has actually got less wealth now than they would have had in 2006 when adjusted for inflation. Now, I do just want to caveat a lot of the wealth information that I've shared in this video, and that's that wealth can be quite a tricky measure to put into context because wealth is relative. So as a really quick and crude example, let's say you had two people, both of them had a paid off house, say exactly the same house, same layout, same build, maybe a 3-bed semi-detached house. One person was in London, one person was in the northeast. Let's say both people had a Netflix subscription and were watching Netflix on the morning. Both of them are leading exactly the same lifestyle at that point. But the chances are that one of them will have significantly more wealth than the other, because if you're the person living in London, if your house is paid off, or even you've been paying off the equity in that house, it's likely worth a lot more than the same property in the northeast. Now obviously this excludes a lot of extra factors like access to amenities and the transport links, etc. that London gives you, which is partially why those house prices are so high. But it does show you that actually wealth doesn't necessarily dictate what your lifestyle is like. And that's why I just urge a little bit of caution when you're looking at the top 1% figures that you often see thrown around. Because I actually think it hides the fact that a lot of people have very similar lifestyles, even as you start breaking into those higher percentages of wealth, just because some of that wealth may be tied up in, for example, pensions or property, which isn't directly accessible and doesn't affect your day-to-day life. Now, I also just wanted to zoom out. And so I've been talking about wealth and income figures just based here on UK data, but what about global data? Now, as you can imagine, it's quite difficult to find good global data, and that's probably because it's quite difficult in many countries to collect the data. In some countries it's relatively easy. But there seemed to be a broad consensus on the different places that I looked that if you held $1 million worth of wealth, which is around £800,000, that would put you in the top 1.2% globally. So just to put that into context, if you're in the top 20% in the UK, so potentially 1 in 5 people watching this, then you are in the top 1% globally. I think for many that could be a little bit of a bump on the head, that actually we are very fortunate to live in the UK in terms of we live in a very developed country with generally good infrastructure and a lot of amenities and services available to us, even if it doesn't feel like it sometimes. Now, one of the best forms of building wealth over time has actually been the stock market. It's generally delivered returns above inflation, especially over long periods of time. Now, if you've seen many of my other videos, you'll know that I invest in the stock market, and you'll know that for my ISA in particular, which is a tax-free savings account here in the UK, I've been using Trading 212. Now, Trading 212, I've got no qualms with it as a platform. I think it's really good. It's a commission-free platform, and they're actually doing an offer at the moment, where if you don't have an account and you sign up using someone else's invite link and deposit at least £1, then you'll win a free share worth up to £100. Now, the chances that you win the £100 free share is actually quite slim. Most people will win one of between sort of about £10 and £12, I've found. But it is free money if you've not opened a Trading 212 account. So I've left my referral link in the description below, so you can open an account, deposit some money, get a free share, and then even if you don't want to use Trading 212 as your platform, you can just sell the share and withdraw your money. So it's literally free money for setting up an account that doesn't take very long to set up. And that's a win-win for me and you as well, because you get some free money and I'll also get the same free share that you get as a thank you from Trading 212 for referring you to their platform. So if you're interested in that, taking up that free money offer, I'll leave the links down in the description below. I also write a newsletter every week that's mostly focused on a different topic, usually an investment-based topic, and you can read all my previous letters. I'll put a link to them in the description below. But if that's something you're interested in, you can actually sign up, again, completely free, and you'll get that email once a week, which just digests some of my thoughts. I'll also give a little bit of an update on the £1 million investment journey in that newsletter, and that's really where I'm trying to build up a lot of the community. So if that interests you, I'll also leave the link for that down in the description below. Now, if you want to join me on my £1 million investment journey, you can hit the subscribe button down below. You can also watch this video here, which is one that YouTube thinks you'll like, so you'll get to see how accurate the algorithm is to your interests. Thanks very much for watching. Bye.